Welcome back to Forex Big Daddy, and today's video is going to be the second part of how we can trade in the Forex market. In the end of the last video, we talked about the unrealized profit or loss and the realized profit or loss. Today, we're going to talk about the price formula and calculating the profit and loss into pips. We're going to take two examples for the price formula. The first is going to be the Euro USD, and most of the quotes is going to be looking like the Euro USD. And this formula means that for each 1 euro, we can get $1.1024. Now, the second example is any quote includes the Japanese yen, and it's going to look like this. And this means that for every dollar, we can get 109 Japanese yen 0.3. In the first example, you can see that there is 4 digits after the decimal point. And the second example, there is 2 digits after the decimal point. We calculate the profit or loss with pips. A pip is the smallest change in the price. And for the first example, Euro USD is going to be the 4th number after the decimal point. And for the second example, USD Japanese yen is going to be the 2nd number after the decimal point. For example, if the price changed from 1.1024 to 1.1028, this means that the price went up 4 pips. In the second example, the USD and the Japanese yen, if the price went down from 109.30 to 109.19, this means that the price went down 11 pips. To finish calculating our profit or loss, we need to know how much is the value of every pip in each trade. And this value depends on how much money we control in every single trade. So for example, if we start a trade with buying 100,000 of the base currency, this means that the pip value is $10. And if the price went up from 1.1024 to 1.1054, this means that we made 30 pip. And 30 pips times $10 a pip equals $300. Any pair that includes the Japanese yen, calculating the pip is slightly different. The pip value equals 1/100 divided by the exchange rate times the money that you control. So if we start a trade by buying $100,000 in a USD Japanese pair and the price quote is 109.3, this means the pip value, it's going to be 1/100 divided by 109.3 times $100,000. This is going to equal $9.15. Now, if we assume that after a couple hours, the price went down from 109.3 to 109.10, this means that we lost 20 pips. So if we closed our trade at that price, 109.10, this means that we lost 20 pips, and 20 pips times $9.15, this is going to equal to $183 loss, and this is, they call it realized loss. Now, if we have $10,000 of a USD Canadian pair, how much is the pip value? Please comment below. Another one, if we have 50,000 of the New Zealand dollar on a New Zealand dollar USD pair, how much is the pip value? Please comment below. If we have $80,000 of a USD Japanese pair, how much is pip value? And in this example, the exchange rate is going to be 109.3. And another one, if we have $35,000 on a USD Switzerland pair, how much is the pip value? If you please comment below. Uh, I know some of you is gonna say that we don't have this much money. We don't have 100,000 or 50,000 or even 35,000. But if you watch my first video, my first part, we talked about something called the leverage, and the leverage allows us to control 50 to 1 of the money that we have deposited with the broker. So if we have $2,000, we can control up to $100,000 and trade with it. Okay, that's it for this video, and don't forget to subscribe and hit this bell notification button. Next video is we're gonna talk about buying quotes and selling quotes, and sometimes they call it bids and offers. We're gonna talk about spreads, and we're gonna talk about interest rate and rollovers. So don't forget to subscribe and hit this bell notification button, and I'll see you next video.